Hi, it's Stephen again. Thank you for joining me on this technical analysis video about double candlestick patterns. The double candlestick patterns we'll be talking about today require two candlesticks and a confirmation of the pattern. The bullish engulfing pattern and bearish engulfing pattern are both trend reversal patterns. Each features one candlestick in the direction of the trend and a second candlestick, which is larger than the first, in the opposite direction of the trend. So if we have a bullish trend, we'll have a bullish candlestick, usually with a long body, and then the second candlestick will be a bearish candlestick with a longer body than the first candlestick that encompasses or engulfs the body of the first bullish candlestick. And the same is true for a bearish trend in the opposite direction. Tweezer tops and bottoms are reversal patterns as well, and they feature two candlesticks with shadows that are equal to the same price, either the high or the low. So if you have a stock trading in a bullish trend and it trades up and touches $50 but pulls back and finishes at $49, and then the next day it trades back up to $50 and pulls back and finishes at $49.50, you'll end up with a tweezer top at that point, because each of the 2 days the stock has gone up and touched 50 but hasn't been able to hold. An important thing to remember as we go through these candlestick patterns is that while they have interesting names, it's more important to realize what's behind each of the patterns and why the stock is behaving as it does after the pattern occurs. Most of these reversal patterns feature a stock that's moved to a certain price and then can't hold that price, either a high or a low, meaning the bullish investors can't keep the stock at a high price because there are more sellers coming in, or bearish investors can't keep the stock at a low price because there are buyers coming in. Now let's look at a couple of charts as an example. First, let's start with the bullish chart of Google. This is the daily chart. We have the stock moving up. We have a large red candlestick here, which puts a little bit of a dent in the bullish trend. But we see a pullback and the stock starts moving up again. So it's just a continuation of this bullish pattern. And then we have the bearish engulfing pattern. So here's what the pattern looks like. We have a single candlestick that's bullish on January 23rd. And then the next day, which is the 26th, this candlestick develops, and you can see it's both longer on the upside and longer on the downside than the candlestick from the day before. And after this bullish engulfing pattern, we see a slight sell-off in the stock of Google or Alphabet, and then the stock rallies again. But this is a pretty clear bearish engulfing pattern. There's no ambiguity that this candlestick is larger and encompasses the entire size of the candlestick before it. Let's take a look at this bullish engulfing pattern for Netflix. We have a bearish trend. We're on an hourly chart here. We have a large red candlestick, and it looks like the stock may continue this downward trend. And then the next day we have this bullish candlestick. That's a bullish engulfing candlestick. The bottom is lower than the close from the day before, and the top of this candlestick, the close of this candlestick, is higher than the open from the day before. So you have a bullish engulfing pattern here, and as we see, the stock trended up nicely after this very clear bullish engulfing pattern. Finally, let's look at this tweezer bottom in the stock of Yelp. Again, we're on an hourly basis. We have the stock trending down from just above the $40 level to the $38.20 level. And then we have the first candlestick in this pattern is a negative candlestick, continuing the pattern. The second candlestick is a bullish candlestick. And if you'll note the price, the low is $38.11 and the low is $38.11. So they went to the exact same price. And again, as I was stating earlier, the reason that this reversal pattern works is because on this day, they couldn't get through this price level at $38.11 and the stock rallied. And then on this day, the same thing happened. The stock went down, traded at that level, and then bounced off. So 2 days in a row, it bounced off the same price. It finished higher on this second day, and then the stock went into a bullish pattern. So that's a tweezer reversal. Thank you for watching this video on double candlestick patterns. In our next video, and the last video in this series, we'll be talking about triple candlestick patterns. Hope to see you there.